Hey guys, what's up, how's it going? Welcome to today's video. In today's video, I'm going to be showing you guys my passive income from my dividend-based portfolio here on Wealthsimple Trade. One of the best things I love about dividend investing is the fact that it's 100% passive. You don't have to do anything, you just got to buy the stocks, you sit back and you watch the income come in on a regular basis. It's one of those rare things where the passive income is actually passive. So that's why I'm a big fan of it. And my goal on this channel is to show you guys how I basically built a dividend portfolio completely from scratch, and I've been building it, as you guys can see, and I tend to do these updates at least once a week to show you guys how the portfolio has been growing over time. So in today's video, we're going to be focusing on the dividends of the portfolio. I'm going to show you guys the individual stocks. I'll show you guys the overall dividend yield of the portfolio, and we'll go through each individual stock. I'll show you guys the yield. I'll give you guys an idea on how much income the stocks are making me, and I'll give you guys some insights on why I hold these stocks from a dividend investing perspective. Alright guys, so just a quick little portfolio update before we get into the video and we talk about some of the dividend yields and how much money I make from this portfolio. From a dividend perspective, let's take a quick peek at the portfolio itself. So here's the total value. We managed to build this portfolio to just under $97,000 over the past about two and a half, I'd say about since 2019. Beginning 2019 is when I first started getting started with investing. That's how much we've managed to build the portfolio over time. We have this spread across two different accounts. Originally, I did have a Wealthsimple Invest robo-advisor that I recently transferred into my trade TFSA. So a lot of that chunk of that portfolio went into the new TFSA, and a lot of the gains and whatnot are not valued here, but we had about $11,000 in gain from about $50,000. So you can add this in here to the gains if you guys want to see the performance. But our personal account that we've kind of just started over the past couple weeks is up $208, and this is mostly dividend based. This portfolio, and then we have the TFSA, which is more of a mixture between U.S. growth stocks and Canadian dividend stocks as well. And this one is up $6,308 plus the $11,000 that I also transferred over from the Wealthsimple Trade Invest account. And before we go any further, I just want to say really quickly, guys, if you guys want to support the channel, there is a link in the description to sign up to Wealthsimple Invest, which is Wealthsimple's robo-advisor. If you guys sign up, use my link in the description of this video and deposit at least $500, you'll get $50 for free. That's an instant 10% return. So take advantage of that offer if you guys are thinking about using a robo-advisor to getting started with investing. And I'm going to be using a quick little cool tool here to kind of track the dividends. This is my own portfolio tracker. I mean, not my own, but this is a separate one that I use separate from Wealthsimple Trade. It's called Track Your Dividends. It's a decent option for Canadians. It's free to use. It's not 100% perfect and it doesn't have a ton of different features, but it's a nice little way just to track your portfolio, and it's easy to update and add things in. And it's not 100% update. I try to update it on about a weekly basis, so it's usually lagged behind about a week or so. But here's the different stocks we have inside my portfolio. As you guys can see, a lot of Canadian stocks mostly are the big focus in here. And then as we go down, we have some finance-based stocks, we have some energy-based stocks, we have CNR, which is a railway stock, we have some real estate for RioCan, H&R REIT, we have TELUS, we have some bank stocks, and then going towards the bottom, which is the bulk of the portfolio, we have our two main ETFs, which is VDY, Vanguard, Canadian High Dividend Yield ETF. This is focusing on our dividend stocks, and then we have the Vanguard S&P 500 for some of the U.S. growth stocks. And a lot of the U.S. growth stocks are in the TFSA to take advantage of that tax-free capital growth that you get inside the TFSA. So here's going to be the fun part of the video. We're going to focus on the actual yields of these companies. And the cool thing here I like about this website is we can sort it by dividend yield. So just a quick little update on if any guys are, I know a lot of you guys are brand new and kind of more beginner focused on this channel. So we're going to cover this from a beginner's perspective. So the dividend yield is basically how much you can expect to make on an annual basis from your stock. So if you have a stock that gives you a dividend yield of 1% and you have $100 invested in that stock, you can expect a 1% return from in terms of passive income essentially. So that would be about I guess 1% would be a dollar or so from $100 and so forth. So that's kind of how you basically kind of see how a dividend yield works. Now we have the other metric, dividend yield on cost, which is going to give us an idea of, in the past when we bought this stock, how much is this kind of making us now? It's not the most important metric, but it just kind of gives you an idea of how, your dividend yields and the compound interest and all that kind of grows over time. And, when you previously bought the shares, how much you're making now. So anyways, going further here, we have some of the stocks here. We're going to go on the lowest dividend yield stocks first. I'm actually going to we'll go on the lowest dividend yield stocks first, and then we'll go to the highest so you guys can see. So the ones at the bottom here are more growth-based stocks. We have ATD.B, Alimentation Couche-Tard. It's the consumer-based stock. They own a lot of the Mac stores, a lot of convenience stores all around internationally. Really good growth-based stock, but they also have a low dividend yield. The nice thing about the dividend yield of this company is it's super low. It's the lowest one in my portfolio, is 0.7%, but they have some of the most aggressive dividend growth. They raise their dividend about 15 to 20% per year on average. So I like a combination of dividend growth plus decent dividend yield stocks. And you're going to see the stocks with the lower yields are going to be the ones that have the wiggle room to basically increase that dividend yield more aggressively on an annual basis, because they just have more money, they have more free cash to spend, they're not obligated to pay it out to investors. So that's the cool thing about it. And these stocks also have a lot more growth than some of the other dividend stocks. So if you're like me and you can kind of wait a little bit for your dividend income, you don't mind kind of allowing it to grow over time, some of these more dividend growth stocks might be something to take a peek at. Going down here, we have VFD, which is the Vanguard S&P 500. Once again, it's a more lower base dividend yield fund. Dividend yield is about 1%, and we're not really investing in these stocks for the dividend yields, not today, but 5 years from now, 10 years from now, they will add up. We're mostly in here for the growth, and once again, this is more focused on the TFSA. Going down here, we have the CNR, which is our third company, and this isn't organized by shares, how much shares I have and whatnot. This is just pure dividend yield. So on the far left column, you can see the shares inside my portfolio, so just keep that in mind. And I'll talk about that when I show you guys the actual income from these stocks and whatnot. So we have CNR stock, which is going to be about 1.53%. So once again, we're getting into some higher yields here. CNR stock is still relatively low. Anything that's under, I would say, about 3%, it's considered a pretty conservative dividend. While if you're looking for more higher yield stocks, you might look around that 3 to 4%, maybe even like 5 to 6 if you kind of want to go really, really high. Next up, we have a Severia Corp. This is a yield of 2.18%. So we're getting a little bit higher here, as you guys can see. We don't have too much in terms of dividend growth, but keep in mind, a lot of these companies, you got to kind of look at them individually to see how much they're growing their dividends. Fortis is once again a more consistent conservative dividend stock, 3.49%. And now we're starting to hit some of those higher yields. So these are the stocks that have more of an established yield, so you'll get more money right away when you invest into them. However, they tend to have a little bit less growth, but that's okay. In fact, one thing I do like to see inside a lot of the companies I invest into is I want companies that are growing their dividend yield on a regular basis no matter what. And that's kind of one of the big focuses that I like on. So even though like some of these stocks you're going to see are higher yield and they have a little bit less growth, they're still pretty decent at kind of doing a little bit of everything. That's kind of my goal with this portfolio. VDY, which is our main ETF here for our dividend stocks, had a yield of 4.15%, so that's definitely getting higher. We have H&R REIT, 4.24%, and RioCan, 4.25%. So those REITs are definitely going to be up there. They're kind of going to be around that 4 to 6% range, and they do provide monthly income, which is really nice. TELUS has a yield of 4.32%. Algonquin Power and Utilities has a yield of 4.35%, so we're definitely getting on the higher side here. TransAlta Renewables, 4.65%, and then TD and Manulife are my biggest yield stocks. Which is kind of funny actually. These stocks took a big hit last year, and I bought them like crazy, and you can see the yield on cost is pretty good for them too. TD's current yield is 4.8%, which is pretty high. And the yield on cost is 5.38%, same with Manulife. But the cool thing is these companies have tons of earnings, they have tons of growth, so we can always, even though they have a good yield right now, we can rely on them to definitely keep increasing those yields over time, and that stock price will most likely grow alongside with it. I think it'd be pretty cool at this point to kind of get an idea of how much the income kind of translates to different values, such as the annual income, the monthly dividend income, and the daily dividend income, so we can just get an idea of how this money kind of adds up over time. So when it comes to the annual dividend income of the portfolio, I'm currently making about $2,399 strictly from my dividends. If we take that same annual income and we divide it by 12, because there's 12 months in a year and we're looking at the monthly income of that comes to about $199 that we're making per month on average. And last but not least, a metric that a lot of people don't look at, if we take our annual income and we divide it by 365, which is how many days there are in a year, we can see that our dividends are on average paying us about $6.50 per day. So that's a cool little metric as well. So I know that's not a lot of money, and it's kind of interesting how you look at it, but you know what? It does add up at the end of the day. And if you do take this money, you reinvest it, you can see how this compound growth. And again, the whole idea of earning all this money, the dividends, while you sleep, while you do whatever it is you want to do with your life, is definitely one of the most attractive things I think us dividend investors like. And I love seeing the money coming into my account on a regular basis. And another cool thing I like about this website is, once again, it's not 100% perfect. and it does change as companies declare their dividends, but we can see the overall yield of our portfolio gives us a rough estimate of how much our actual portfolio yield is. So we have 2.49% of the overall yield of the portfolio. That's selecting the personal account and the TFSA, putting it all together. We have a 2.49% yield, and our overall yield on cost is 2.64%. Once again, this isn't 100% accurate. It's just going to give us a rough estimate on the type of yield we have. So as you guys can see, we actually don't have a super high yield, but once again, this is mostly because we do have a lot of shares inside our US market, which kind of bumps that down. So a lot of our Canadian stocks are more higher yield, and our US stocks are more lower yield, more focused on growth to get that tax-free capital growth inside of our TFSA. And the last thing we're going to be focusing on is the total profit growth or gain for some of these stocks. So once again, this is going to be a different perspective. It's going to kind of show you guys which stocks are giving me the most in terms of growth. And this is just pure profit. So once again, obviously the stocks that I have more shares of are most likely going to give me higher profit, higher growth. You could also look at the actual percentage in growth. That's something you can take a peek at as well. But we're going to focus on the stocks that are giving me the most growth. And once again, it's going to be the ones I invested in the most. But nonetheless, I'm going to show you guys. So VFE is our number one growth that has given us the biggest growth at $2,270 since we first started investing inside this portfolio, which was about 2020 or so. And I've just been kind of buying on a regular basis. The second one, once again, is no surprise here. It's my I'd say like my second biggest holding with $1,327 coming from VDY. RioCan, we have a total growth of $517, which is pretty good considering I only have 120 shares. TD, once again, is coming in a really big one for me as well, $390 in terms of growth. H&R REIT, $329. Severia Corp, $133. Alimentation Couche-Tard, $105. And once again, you have to look at the shares. Obviously, that plays a big part too, but we're just looking at raw numbers here. TELUS, $100. CNR, $79. Transalt Renewables, Manulife, Fortis, and then my only negative stock inside the portfolio was Algonquin Power Utilities, because they had a bit of a rough past year or so, or I should say past like maybe 6 months or so. But this stock is a great stock. It's just they kind of had a bit of a dip recently. We should see that kind of bounce back kind of towards the end of this year, I would imagine. And the last thing we're going to focus on before we kind of end this video here really quickly is going to be the dividends earned on a monthly basis. This is a super cool perspective. I don't see a lot of people doing this, and this really gives you guys a sense of value. It also allows you to see your progress and your growth over time, and that's super important when you kind of get to that point where you've been investing for a little while. You might hit some plateaus. You might start to kind of be like, well, this is cool, but you know what? I don't know if I'm, like the whole kind of excitement kind of where it starts to wear off kind of thing. This can kind of put you back in your place and get you back on being motivated and excited about investing. So once again, we have about $21 of total investing with this dividend portfolio. I'm going to go back up here. You guys can see that, the income has just been steadily growing on a monthly basis. And I know we're kind of sitting at about $100 or so right now. We scroll down to August. We have $78 in August, $111 from July, then $88 from June. I know for a lot of people that's not going to seem like a lot of money, but it does add up. And when you look at where we came from, we're making like $1, $5, $7, $12. That's super good growth. And fast forward like a couple more years from now, this $100, we're going to see a lot of growth from that too. So that's something that's just going to happen. And I know it's hard to wrap your head around it, but it does add up, especially if you take those dividends and you reinvest them on a regular basis. Here's a visual graph of all that so you guys can see a more visual representation of this. So once again, very small in the beginning, but it starts to add up. And you guys can just see it's kind of consistent. You go up, down, up, down, up, down, up, and it just keeps going kind of higher as time goes on. So that's kind of how those dividends work. And if you look at the total dividends of the portfolio, I like to include the last monthly income here. So this is kind of like the previous month kind of thing. And just to get an idea for myself, I might eventually make this like the average monthly dividend so we can average it to see. That might be a cool thing to do. But the total dividends in total that we've earned inside this portfolio after 20 months of investing, since it's pretty early in September here, is $848. Once again, doesn't seem like much, but it does add up over time. Alright guys, that's it for today's video, so let me know what you guys think in the comments. If you guys enjoyed the video, be sure to give the video a big thumbs up, and remember to subscribe if you guys want to kind of follow me alongside here and kind of follow my journey and see how I've kind of basically been building my portfolio up over time. You guys can subscribe if you want. And if you guys want to get started with investing and kind of get the ball rolling like I've done here, there are some links in the description video that you guys can use just to support the channel if you guys want. So anyways guys, hope you guys enjoyed this video. Take care. I'll talk to you guys later and have a good one.